Guys, welcome back. So welcome back to chapter 5. We're going to be continuing with 5.2, understanding periodic inventory, when we're dealing with purchase returns and allowances. So, what is purchase returns and allowances? Obviously, when we're getting shipments of inventory, right? There are lots of things that can happen when dealing with these kind of things, because one, we can get shipments of the wrong items. Some things show up broken. Other things is there's maybe a cheaper supplier that was available, or if anything, we didn't like customer service, so we're like, return it. Okay, there are many things to why we can return anything to a vendor. Okay, because they want us as a customer to keep buying from them, so they're gonna want to try to do everything they can to be able to provide good customer service, but also keep us as a customer so they can continue doing their business as well. But again, oftentimes, if you're buying in bulk, you can get a possibility of the wrong shipment. Maybe it's the wrong size. It's not what you want. And what you can do is you can demand a refund from your vendor. So the great thing about vendors is they also are pretty lenient. They give you terms, but they're also lenient because, again, they want your business, so they're willing to give you a full refund for anything that you return to them. Okay, so very common that when we are the buyer, we oftentimes will have the need to return a few items. Okay, so again, because they are our vendor, and they are providing for us, they will also give us special privileges such as either discounted price, and they will also offer special offers, as well as unlimited returns, and as well as money back. All right, guaranteed, right? So oftentimes, like even as a customer standpoint, if we have a company policy where we're like, okay, we understand that the customer is unsatisfied, we'll offer a free refund within policy, right? But for vendors to us as a retailer, we are again we get a little more leniency when it comes to purchasing items from them. Okay. So first thing we're going to be recognizing is we're going to be dealing with purchase returns and allowances. So again, we're going to be dealing with the periodic inventory. So here, for example, on January 1st, you purchase 100 coffee mugs on account from Cuppies Co. All right. Again, each cup was going to cost you $1.25 each, and shipping or freight is $100. Okay. Go ahead and let's go ahead and record this transaction. So how do you record it?
Okay, 1 January.
January 1st.
Okay,
Purchase expense. For how much?
for $125.
For $125. And then what's the next thing that we need to enter in?
The freight expense
Yes.
of $100.
Again, freight expense for $100. And then because it was on accounts payable for $225. Okay?
Yep.
Yes.
All right. Now let's just say, all right, well, on January 5th, when I received my inventory, right, I end up finding that 10 of those coffee mugs were broken, due to shipping. The person accidentally dropped the box. I don't know. And I find that there are 10 broken mugs. Now, I can obviously go to the vendor and be like, because of your shipping company, I received 10 broken mugs. I demand a full refund. And the vendor says, Yes, yes, yes. Okay. I will give you your full refund. All right? So, when we're dealing with a refund, which number are we going to be using? Are we going to be using $1.25? Can you take a refund on shipping?
No.
No. So therefore, the only number that you have left is the $1.25. That is how much it cost you for every single cup that you bought. So in this case, I'm demanding a full refund on the 10 broken cups.
So $12.50.
$12.50. Okay. Now, because we're dealing with purchase expense, right? You need to create another contra account. Okay? So let's look at the top of the title. What does it say?
Purchase and return.
Purchase, returns, and allowances. Okay? So therefore, because we're demanding for a full refund, what are we getting back? What are we receiving back?
The purchase price.
Yes.
Purchase expense.
Okay. Okay.
So purchase return.
How did we pay the vendor?
Oh, accounts payable.
And
Yes.
accounts payable.
Mm-hmm. So now we have to understand, okay, January 5th, I'm going to recognize that I owe less money now. Why? Because I'm asking for a refund. They have to refund me somehow. So again, they're going to refund me for $12.50 because it cost me $1.25 for those 10 broken cups. And here I created a purchase returns and allowance account, a contra account to purchase expense. Okay?
Okay.
All right. So that's what happens. You're going to get back your money in terms of you're going to owe less money. And you're going to create a contra account called purchase returns and allowances. All right. Now, on January 5th, you received your items and found 25 cups were the wrong size. Like, hello, I ordered regular sized cups, but you gave me these really big cups. And I decided I want a refund. But the vendor's like, well, hey, you know what? You could still sell these cups. Why don't you just keep them? And I'll give you a discount because I sent you the wrong product. It's not what you wanted. And I say, you know what? You're right. I can still use these cups, not like I can't. I can still sell these mugs for a higher price, and it's a limited edition only. So only limited time you can buy the large size cups. Okay? And I will accept your 20% discount. All right?
Okay, so it would still be accounts payable
Yes. Okay.
on January 5,
Mm-hmm.
and 20% of the 25 times $1.25, that should be $6.25.
Yes. Good. Wow, you're so good. Yes. So.
What? No, I don't. I have my calculator now. I have my phone.
All right, no worries. Hey, take a compliment if you can. All right.
Okay.
So, again, yes, you're going to reduce the amount you owe, right? It's your formal way you're supposed to be paying them. So, they're going to reduce the amount that you owe. And again, you're going to recognize, again, purchase returns and allowances. Now, why is this account even there? So again, purchase returns, right? It's straightforward. It's when you return your items, that's where you're going to put it. An allowance is pretty much, it functions the same way, but instead of creating a purchase discounts a purchase returns and then a purchase allowance, we decided to just put them all together. Purchase returns and allowances, because they function the same way, regardless. You're still returning an item.
It still flows the same.
It still flows the same way, correct. So again, we recognize that the discount is going to be based off of the 25 cups I'm trying to return for the original amount, which was $1.25, and we're going to take 20% off of that. And yes, so you're correct, it's $6.25. All right. Any questions on that? Because that is all this chapter is about. Okay, so again, recognizing the purchase, right? And if you get a full refund, where are you getting? Are you getting your money back, or you're reducing the amount that you owe? And because you're under periodic, you're gonna have to create a contra account, which is going to be purchase returns and allowances. If you're trying to attempt to return, but they decided to give you a discount and you accept it, then again, same thing. How are you getting your money back? Or are you going to be reducing the amount they owe? And again, purchase returns and allowances for the discounted amount. All right.
Okay.
Any questions on purchase returns and allowances?
No, that was fun.
All right. Again, it's pretty simple. It's pretty straightforward.